Hello, greetings. Welcome to Dividend Blasters. This is our 91st video and topic today, investing smartly in AI. So this is part three of a three-part series on AI and investing in AI. And if you recall, 2 videos ago, I talked about the AI ecosystem and the different levels of artificial intelligence out there. It's really a reflection of the technical capabilities, or you know, taking it at the aggregate level, really the tech stack that's out there to drive this industry and to deliver artificial intelligence. Then the second video, we talked about the stocks, the companies, the stocks that engage and play across the AI ecosystem. If you recall, I talked about 5 different levels in the ecosystem. Some of these companies play solely in one of the 5. Some of them play in multiple levels. Some of them play in 3 or 4 levels. The very big companies. Go back and watch the video, and you'll see that. Uh, Today, we are going to talk about ETFs. ETFs you can invest in to get exposure to AI. And, I got to tell you, why do we invest in ETFs? We invest in ETFs because we want to get broader market exposure, or maybe we're not quite sure which stock to invest in. So we want to spread our risk. We want to get broader, wider exposure. But as things are today, there's a lot of specialization out there, and several of these ETFs are specific and unique to various subsectors, subsegments, sub-levels of the AI industry or ecosystem. So I'm actually going to break this part 3 out into 3 smaller videos. They're going to be quicker, but I'm basically I'm breaking these out into 6 classifications or categorizations of AI ETFs. So that's what we're going to do. So let's press on. So we're going to talk about ETFs for exposure. First, a disclaimer. I'm not your advisor. What I tell you today, you should not be taken as financial advice. These are my opinions based on my research and experience as an independent investor for more than 30 years. So do your own research, do your own due diligence, consult an advisor before making any investment decisions. So the 6 categories are, and I'm going to read them and I'm going to give you the description. Broad tech growth. This is the widest, broadest category. The stocks in these ETFs are the large cap tech or growth funds with significant AI exposure, but they're not exclusive to AI. And so when you're gonna when I cover this, you're gonna say, "Oh yeah, I've got this ETF. Yeah, this is big." They're basically tech ETFs, so they're not specific to AI. The next category are those broad AI focused ETFs, and these ETFs invest across the entire AI value chain, whether it be hardware, software, models, the platforms, any one of them. So it's within AI. It's less broad than the broad tech growth area, but it's specific to AI, but it's across multiple areas of the ecosystem. Then there is thematic AI, and these ETFs focus on a specific AI theme. ETF that might focus on solely generative AI or robotics or automation. Those are the thematic ETFs. Then there are mixed robotics and AI. So it's a blending of thematic. It's really a blending of robotics and AI to give you that exposure. Next one is semiconductor or hardware, and these are really the chip makers. Okay, the companies that are making chips and hardware. The servers that the chips go into for AI. I'm going to be covering broad AI focused in semiconductor and hardware, those categories in this first part 3 video. And then the last category is actively managed AI ETFs. These ETFs use active management, sometimes leveraging AI in the process. That's interesting. They're very actively managed. So here is a diagram, a Venn diagram that shows you the 6 categories. And as I mentioned, at the outset. Um, the largest category is broad tech growth. And so, there's eight ETFs in that outer circle. Immediately, you're going to recognize QQQ and QQQM. Not an A. Those are not AI ETFs. They're technology or Nasdaq 100 focused ETFs. Vanguard has three: VGT, MGK, and VOOG. And Schwab has three: SCHG, which is a large cap growth ETF, SCHK, and SCHX. And we have a couple with Fidelity, Defiance, ARC, SS&C. Um, so that's the widest. And then we're going to start to break into the niches. And I'm going to focus first and foremost on semiconductor hardware and the broad AI focus. And you can look at the logos in there, and we'll cover them as we move on. But anyway, let's press on. So, first category, semiconductor and hardware, the chip makers. Okay, hardware and power. Those are remember, this is basically the hardware and the energy that drives artificial intelligence. That's where all the power comes from. And so there's two of them here. The first one is by VanEck, and it's called the VanEck Semiconductor ETF, ticker symbol SMH. This ETF closed at a little under 280. These quotes are as of Monday the 7th, so a couple days old, but not too much change. You can see the 52-week range. We're up near the top of that range. You know what? That expense ratio, I like it for a specialized ETF. 35 basis points. It does pay a dividend. One annual dividend yielding 0.38%. Dollarized, it's about $1.07. So you know what? To me, that's a little frosting on the cake. The rating summary. This comes from Seeking Alpha, which I, strongly believe is really the premier online digital publication for investors. They rate them a buy through their quant team as well as their analysts, their qualitative analysts that do qualitative analysis on the ETF. So, you can actually take a look at the total return. And for all these, I'm looking at total return because, like I said, this one here pays a dividend. I want to know what that total return is. Almost three times as much as the S&P 500. That's not surprising. There's really a handful of these, AI stocks or chip stocks that are really leading the way. And, I'd have to say that without a doubt, NVIDIA is really leading the pack. So a little under 16% total return year to date, whereas S&P 500 is 5.92%. You're going to see this S&P 500 figure in all of these, just to compare as a benchmark. And the key holdings, NVIDIA, and why is this so successful? They have a 20%, more than 20% stake in NVIDIA, followed quickly by the leading foundry, Taiwan Semiconductor, which is the manufacturer, the processor of all of the major chips in AI. And then you have Broadcom, and they are at a little under 10. Taiwan is a little over 11%. And then you followed closely by AMD and ASML and Applied Materials. And those next two are primarily chip equipment manufacturers. They manufacture the equipment that drives the chips. And we talked about that in the first video. So that is VanEck. Next one is by BlackRock, iShares, part of the iShares family, and it's SOX, ticker symbol SOXX. They closed a little under 239 bucks. They're about three quarters of the 52-week high. Expense ratio, very reasonable, 0.35%. SOX and SMH, they are really the two leaders in this subsector here. They also pay a dividend, a quarterly dividend. The yield's a little higher, a little bit more generous, 0.68%, which is about $1.65. Take a look at the assets under management, $13.69 billion. Let's just go back briefly here to SMH. They're about twice the size, $27.33 billion assets under management. So you know what? These are much smaller than a lot of the generalized ETFs that we invest in, but these are specific, specialized ETFs that focus just on chips. So they're going to be a little bit smaller. Um, they have a strong buy by this Seeking Alpha analyst, and the quant score from the Seeking Alpha team is a buy. And you can see that they more than double the S&P 500, a little more than 11%. And that difference from SMH may be the dividend. Because remember, the total return for SMH was about 16%. This is about 11%. Still much more than the S&P 500. You got to just know that basically NVIDIA is pulling this thing along mostly. Um, NVIDIA is the second largest holding. First one is AMD, not by much, really about even, and then Broadcom, and then Texas Instruments and Qualcomm. And we talked about Qualcomm; they're really the leader in wireless chips with the Snapdragon, and then Micron Technology, which is the memory chip leader in the industry. All right, next category, those ETFs that have a broad AI focus. They have diverse AI software and hardware companies that they invest in. So the first one is by Global X, ticker symbol AIQ, and it's Global X Artificial Intelligence and Technology. They closed at about 43 and a half, right near the top of the 52-week range. Expense ratio is a little higher here, 0.68%. They pay a dividend of 0.14%, about 6 cents. They get a buy by the quant team and by the analyst. And you can look at that total return, 14%, not bad. Not bad at all. Those are year-to-date returns. And you look at the top holdings, it's a little different here. Tencent Holdings, then Netflix, then Oracle, then Samsung. So it's not, your chip makers. It's broader focus with some hardware and software. And as you go down the list, you're going to see Palantir in there. Okay, we know all about Palantir. And then you see the Broadcom, which is more of a communications networking chips and semiconductors. And then Meta Platforms, of course, we know that, the social media and cloud computing giant, Cisco Systems, Microsoft, and IBM. So interestingly, we don't even see NVIDIA in the top 10 here. They have a very different focus. So that's just something to think about. The next one by Wisdom Tree, ticker symbol WTAI, Wisdom Tree Artificial Intelligence Innovation Fund. They closed at about 24 and a half, near that top range of the 52-week high. A lot of these are because the market is hot. Expense ratio 0.45%. They pay a dividend once a year, 0.17%, or about 4 cents a share. Assets under management, $215 million. They get a buy across the board, buy rating. Their total return year to date, almost 12.7%. Not bad at all. Their top holdings, Broadcom, followed by Palantir, NVIDIA. These are a little bit more familiar than the last one. Then Taiwan Semiconductor, SK Hynix. I've heard of it. I don't know enough about it to speak, a lot of detail of it. But they're in there. There's a couple of these ETFs that actually invest in that as well. Then Meta Platforms, and then it goes on and on. All right, let's press on. AIS, Vista Shares Artificial Intelligence Super Cycle. This is by Vista Shares. This is a very new ETF. I actually own several shares of Vista Shares AIS. It closed at about 27 and a half. Expense ratio is a little bit higher, 0.75%. They do not pay a dividend. And you know what? That's fine with me because I'm investing in these things not for the dividend. I'm investing for capital growth. That's what I want here. The assets under management, little over 19 million. They're much smaller, but they actually just launched last month. These guys are very new, but they're doing very well. And they actually came out with a family of 4 ETFs, and they're very, innovative. So I'm very happy about this one. They have so far really been crushing it. Total return. Actually, I got the price return here, but it's the same thing because they don't pay a dividend. A little under 18% return year to date, and that's really just in the last month. So I just have to say this is just spectacular. Top 10 holdings, another one, SK Hynix Inc., and then Taiwan Semiconductor, the foundry, then NVIDIA, then Micron Technology, the leading memory chip. If you don't really know what NVIDIA does, and hopefully you do, but it's basically the leading designer of GPUs or graphical processing unit chips. And I covered that a lot in the second video and also in the first video. Go back and check it. Then you have Vertiv Holdings and then GE Vernova, one of the spinoffs of General Electric. Then AMD, or Advanced Micro Devices. All right. Next one, First Trust Bloomberg Artificial Intelligence ETF, or FAI, managed by First Trust, closed at 35. Expense ratio 0.65%. They pay a dividend, but they do not show us what the yield is here. So I'm a little perplexed, but I'm going to go take this as an action item to dig up on this a little bit more. That's kind of strange. The total return is pretty decent. It is almost 3 times the S&P 500. It's about a little more than 15%. So really good. And of course, why is that? Because NVIDIA is the top holding, a little more than 9%. You know, what you're going to see in a lot of these, they're going to have a lot of the leading AI performers in as their key holdings. There may be some changes here and there, like especially in this broader category where you may see more software. But where's it going to vary? It's going to vary the allocation. You know, what separates these ETFs from each other? The allocation of the holdings and also the expense ratio and whether they pay a dividend or not, what they yield is. So, you know, you have NVIDIA, Meta Platforms, Microsoft, Amazon, okay, Alphabet Class A, and then Broadcom, Oracle, Palantir, AMD. Interesting. Next one by iShares, BlackRock's iShares is BAI, and it's the iShares AI Innovation and AI Tech Active ETF. They closed recently at a little under 29 bucks. Expense ratio 0.55%. Pays a dividend twice a year. It's a very modest dividend. It dollarized, it's zero, or probably a little more than zero. They just couldn't round up, but it's a 0.02% yield. And with that low yield and that modest price of 29 bucks, you're going to have a very low dividend. Assets under management 2.15 billion. That's not surprising because really anything BlackRock manages, you're going to have billions in these ETFs that they're managing. It's really the large, you know, the 800-pound gorilla in the ETF industry. So it's BAI. Their total return, well, it's not hugely more than the S&P 500. It's about 6.5% year to date. And you can see the leading holdings are NVIDIA, Broadcom, Meta Platforms, Microsoft, Snowflake, Oracle, Amazon, Taiwan Semiconductor, and others. All right, next one by ETC, and it's the Robo Global Artificial Intelligence ETF, ticker symbol THNQ, closed for about 54 and a half. Expense ratio 0.68%, no dividend. Seeking Alpha analysts have not covered this, and so they've not given their assessment of it, but their quant model rates it a buy. This one's a little smaller, assets under management, about $203 million. Still nothing to sneeze at. Nice total return, 11.33%, double S&P 500. And top 10 holdings. Here's one that's a little different. Ambarvella, and then AMD, and then Taiwan Semiconductor. Datadog, analog devices. What's nice about some of these is that it gives you some exposure to some companies that are not necessarily NVIDIA or Broadcom or Taiwan Semiconductor. or AMD. It's some of these others, which is really interesting. And I like the price of some of these. This one, well, why does this one have a strong sell quant rating? So let's talk about this one a little bit. This is ticker symbol AIPI. It's managed by Rex Shares. It's Rex AI Equity Premium Income ETF, AIPI. They closed at 43.33. Expense ratio is 0.65%. It's a monthly dividend. Their dividend yield is high. Um, these are like covered call ETFs that give you a huge distribution monthly. So uh, basically, what's going to happen is when you get that dividend or that distribution, it's going to impact the price. And you are likely to you will get a lower price return. You will very likely get a negative price return. However, you want to get a distribution that is at such a rate where it pays to get it, but also the total return uh, stays above zero, certainly, and really above the market. This has a strong sell rating, and I will tell you that the total return will be. Let's take a look. It is not negative; it's positive, but it is less than the S&P 500. It's 5.55%. This is lower than really any of the ones we've covered. It's less than the S&P 500, and really it's because that distribution is so high. You know what? And for some folks, this is great. They want that cash. They don't care about the price return, the total return. Hey, if it stays level with the market or about that, and I'm getting cash, I can take it. I can redistribute it. It's really a matter of personal preference. But you should know that they get dinged by seeking alpha for that. So just wanted to mention that to you. You can see their top 10 holdings: NVIDIA, CrowdStrike, Palantir, ARM, um, also a chip designer, Cadence, Datadog again, AMD, Super Microcomputer. Those guys are very good. They work closely with NVIDIA in putting those dense servers together. Synopsys, and then, of course, Micron Technologies. But really, the major takeaway here is that it's just got that high distribution. For some folks, that's wonderful. Some folks, I like, when I'm investing in these, I want my capital growth. I get my dividends and my distributions and other things. But anyway, that's just me. Hey, to each his own. So, folks, that is it. I hope you found this to be useful, enjoyable. Give me a like if you thought this was informative. Subscribe to the channel and share with a friend. I'll remind you that as an affiliate partner of Seeking Alpha, discounts are available with these links. So if you are interested in subscribing to the premium or to Alpha Picks, or if you want to get both, you can get the bundle. You can get a deal with these discounts. Select the link or the QR code to the right, and you can take advantage of these wonderful discounts. And here's a little bit more detail. You can read about those subscriptions. Also, see that I'm on multiple platforms: X, Instagram, and Facebook. Folks, that's it. Have a wonderful, wonderful day. God bless.